Hey everybody, Dan Fitzpatrick here, stockmarketmentor.com. And today, just kind of a quick one here. I want to look at Enphase, solar company. Stock is doing a hell of a lot better than it used to be doing because it's been really in the doldrums for quite a while. But it's working pretty well now. Earnings still, well, I guess they're okay, but not that great. And the stock, though, is busting out of a base here. So the stock ran up here on earnings. So earnings are okay. Didn't hold this line here, which is not a bad thing. And then it came back down to test this 200-day moving average. And if a stock's below the 200-day moving average for whatever reason, it's just dead to me. And so I have not been following this stock at all. It just never popped up on my radar screen, but now it has. And so as I look at this, my question is, okay, do I buy or do I stand aside? Do I sell? I definitely wouldn't sell. But the way I'm looking at this is, okay, this has been a long decline here, a lot of distribution, a lot of markdown here. And then over the last several months, this stock has been trading sideways. Now, it's been in a pretty volatile range. So this thing's been down 40% from up here to down there. So it's kind of hard to say, oh, it's a base, but it kind of is a base. I mean, that's what happens with these stocks. It's just been kind of a real ugly base. But I want to show you something here. So, what are we going to do? What do we do with this stock? Well, you can do what I call, you can use the two box method, which is something that I just made up. And this is why, because it's got two boxes. And what I do is, in order to kind of get a good sense of, do I think the stock's going to go up or down? I can just kind of look at, I mean, I don't need this anymore to be perfectly candid with you. Like, I know what I would want to do on this. But for a lot of traders who aren't really, who haven't been looking at charts for 30 years, for a lot of traders, they can get kind of confused and start letting their emotions, their hopes, their fears, whatever, they start letting that kind of impact what their view of the chart is. And so this, I just developed this. It's totally easy. I wouldn't even say it's developed. I just kind of thought of this. This way for people that are maybe not quite so experienced at charts, or they just find that this could help. I developed this thing where all you do is you look at where the price is right now. I guess I could probably put this a little bit lower. You draw a line and say where the price is right now. I got a box up above, I got a box down below, and I'm thinking, okay, which way would the stock likely go from where it is right here? Would it go into the green box, which would be a good thing, or would it go into the red box down below, which would not be a good thing? It's going to oscillate back and forth no matter what it's going to do. But as I look at this is what I'm seeing. I'm seeing volume that's much lower than average, much lower than average volume. So that's really not a good thing when you see the stock starting to pick up here. What you want to see in a case like this is you really want to see a pickup in volume. Like you see how this has been drifting sideways here on low volume, but then once it broke out and it started to move up, you can see that the green skyscrapers started to get a little bit taller here. So we're not seeing that yet. And so I don't have a lot of faith in this move. Could go up, but by the same token, it could also go down. So I look at this as really kind of a wash trade. It could go either way. This is what I would say, though, which is what I'm going to say. If you're buying the stock right here, where are you going to put your stop? You're gonna put it here, like down right at these lows here. I've already got a line drawn. But if you do, then maybe you kind of need to look here at the 200-day moving average because the stock's holding there. So in that case, you need to put your stop below the 200-day moving average, like somewhere around here, right? Well, the problem with that is the stock would have to fall back over 12% before you could even say, you know what, I'm wrong about this trade. It's not going to work out. And so with that, if that's your deal, like I got to have a 12% stop, then the stock needs to go up 12% just to give you a 1R to make $1 for risking $1. Because of that, I look at this trade and I kind of say it's a nothing done. I just look at it and say, no, we can't really trade this stock. Now, this could totally change tomorrow. That's why I'm doing it tonight. You could think about this two box method and say, like, okay, well, if the stock starts running up into this box, that's a good thing. I'll go ahead and take this and maybe set a tighter stop. So the point of this video is to just help you kind of craft a trade. Give yourself a good idea of what the risk is and what the reward is, and then you can make better trading decisions. And I think you'll wind up two things. You'll wind up making fewer trades, and you'll certainly wind up taking fewer large losses. Like you're going to take small losses if you're applying this box method correctly, because you can really see the trade before you even buy the stock. So anyway, that's all I got for you. I hope you guys are having a great evening, and I will see you tomorrow. By the way, before I forget, check this out. It's on the homepage. I'm doing a live trading session on Thursday. This is after NVIDIA reports earnings on Wednesday night. And so if you are a 59-minute trader, or I just call you a 59er, you've taken my courses, then this could be a really good training session for you. You're probably going to make some money because there's several other stocks that are going to be moving in response to what NVIDIA reports, like Taiwan Semi, Broadcom, probably AMD, just a lot of different stuff. So I think it's going to kind of be a target-rich environment on Thursday morning. So I want you to be there. So just click on the link here, and then you can get all the information that you need. Okay, so that's it. I will see you guys tomorrow.